Hello traders, and thanks for tuning in to this market outlook from Exness. In this video, we're going to be looking at a possible idea for a trade over the next few days, some of the primary narratives driving the possible movement, and what traders who were to take that position would need to be aware of in terms of economic data. But before that, we're going to be looking back at the performance of last week's idea. Last week's idea was a possible buy for gold from the area of 1,950 with a possible target around 2,000. That idea hasn't been triggered yet and could well still be valid, although traders who were to take it should allow some time, possibly, for gold actually to complete such a movement. Now, for this week's idea, I'm Michael Stark, Financial Content Manager, and I'm joined by Andreas Themistocleus to give the idea, Trading Specialist. Thanks very much, Andreas, for being here with us.
Hello, Michael, and thanks for having me.
What do you think is the idea for a possible trade for this week then, Andreas?
So for this week, we will check on the Euro-USD chart for a long position with a potential target around the 1.08 price area. The price found sufficient resistance on the upper band of the Bollinger Bands in early May and has corrected to the downside since then. The stronger dollar has pushed the price of the fiber chart, causing losses of around 4% in May. Also, if we take a look at the chart, we will see here that the stochastic oscillator is in the extreme oversold area, indicating that a correction to the upside might be possible in the following sessions. Also, the 50-day moving average is trading above the 100-day moving average, further supporting the narrative of an overall bullish momentum in the market. The first point of resistance, the 1.09%, is not a random number, is the 50% of the daily Fibonacci retracement level, and is also an area near the 50-day moving average.
And what are some of the main narratives, or the single main narrative that's driving that possible move up by euro-dollar?
So if we check the 30-year Treasury bond yields chart, we will see that there is a decline from the yearly high of 4%, meaning that investors are slowing down capital flow towards the dollar, pushing the price of the Euro-USD chart to the upside. Also, expectations of recession still in effect since there is no final vote on the debt ceiling agreement just yet, and developments on the monetary policy are in focus for the investors this week.
And in terms of regular economic data and any other kind of important news, what do you think is the most important releases or items that traders are going to be looking at if they were to take that position?
In terms of economic data for the dollar, we have the job openings for April expected to drop, manufacturing PMI expected to remain below 50, indicating contraction in the manufacturing industry in the States, and also the most important data for the week on Friday, which is the US job report. NFP is expected to drop, and unemployment rate is expected to rise to 3.5%, even though it's still close to the all-time low of 3.4%. If all of these expectations are confirmed, we might see the dollar losing momentum and incurring losses against its pairs in the short term.
Okay, thank you, Andreas. And in summary, the possible idea for a trade this week is a buy for euro-dollar with a possible target around $1.09. The primary narratives that are driving that possible move up by euro-dollar are action in bond markets in the USA, and there's also focus on monetary policy and the debt ceiling and the ongoing debate around that in the USA. This week's most important release is the US job report, including non-farm payrolls, but traders are also looking at PMI and other statistics from the USA in the next few days. Thanks very much, Andreas, for being here with us and giving us the idea for this week.
Thank you, Michael, for giving me the opportunity.
And remember, this is just an idea for a trade. It's not a guarantee of success or a signal. Always do your own research and manage risk.